Okay, so greetings, 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 greetings. Checking the levels here. Looks like everything is connected, so we're now live on YouTube. And let me make sure we have the other connection going. Okay, so TL Turner here. Thank you so much for stopping by. If this is your first time either attending a live, let me just see who we have in. Yes, yes, yes. If this is your first time attending a live, definitely want to know where you're from and what's your favorite instrument to trade, whether that be Forex. If you're familiar with my trading style, I stay in my lane. I trade currencies primarily, GBP, USD specifically, and USD ZAR. And yeah, curious to know where you're from and what you trade. And also, we just posted about an hour ago a poll to the channel, so be sure to check that out. We are really curious to understand our audience and to know what is really holding the average trader back from securing a funded account. And in my coaching, because we do offer a funded trader consultation, one of the things that I've noticed is how traders, and I mentioned this before, how traders tend to pass their evaluation phase, and then something happens when the quote unquote real money is on the line. And we've developed a unique way to help traders overcome that challenge of passing the evaluation, and now they're stuck with a feeling of now what. And for whatever reason, unfortunately, traders will pass the evaluation stage, and then the next step is where they breach their accounts. So we're looking to help you out with overcoming that challenge. You can visit thebillionairetradingclub.com to book a funded trader consultation. This is a recorded session, so you're able to go back and review and dive deep and really get a better understanding of what you can do to be successful. So the next available slots are here, and definitely can find out what works the best for you and request that booking. So let's get started with today's live. I'm very excited to share this topic, and if you are wanting to support the channel, you can do that a couple different ways. The free way, quote unquote free way, is to like the video, to share the video, to subscribe to the channel. We've take a look at the analytics this morning. We were talking about them, and it shows about 65% of our viewers are not subscribed. So do me a quick favor. If you are looking forward to having content around the idea of developing yourself as a trader, then subscribe and like the video, share it to the platform that you choose, because we're looking to build a community of like-minded traders that are really focused on self-development. The strategy portion of trading, you'll hear me say time and time again that I do believe trading successfully is 95% mental, 5% technical, 95% the quality of your thoughts, your self-image, and 5% your edge or your way of seeing the market, whether that be fundamental analysis or technical analysis. So we're going to dive into a very powerful topic today, and I'm going to be in your face today about why your trading plan is trash. And I'm going to go over a Few topics. We're going to discuss, if you'll stick around until the end, we will discuss how to build a rock solid trading plan that you'll actually follow. However, we got to start with the first part, is why you actually don't follow your trading plan. And if we're being transparent, if we're being honest with each other, I'm pretty certain that you have a trading plan. It's somewhere. It's probably on a Google document that you haven't opened in months, or in that trading journal that you started out with in January and you placed somewhere that you forgot about. But the real question is, do you actually follow your trading plan? Or are you rewriting it every time you blow another account or you breach another challenge? On your screen, you'll see this was the original trade tracker, and that we used with our Pips Over Money members. And this is the original version of it, the IQET trade tracker. Now, those words are here: identify, qualify, execute, and track. So this is something that I developed to help our traders to make sure that they were holding themselves accountable. This is the old version. You can see some of the trades from 2020, 2019, and this is a new version, which we'll kind of dive into today. This is not a trading plan per se. It is a part of our trading plan, our trading principles, our trading behaviors to update the trade tracker. However, just focusing back on this idea of a trading plan, are you rewriting it every time you breach an account? Because if we're keeping it real, or if we're keeping it honest, I would say about 90% of traders don't have a trading plan. They have a fantasy. They have a wish list. They have a Pinterest board of discipline that they hope to one day magically follow. However, when that chart spikes, when price breaks a level that you weren't watching, or when you're down 2% and you just want to make that back before a lunch, what happens? Poof, that plan is gone. It magically disappears. So I want to break down in this video and this session that we're having why most trading plans are garbage. Okay. Problem number one. The first problem is that most people have a trading plan that is copy paste BS. Okay. Most people have a trading plan that is copy paste. Okay. Just going to put C/P. Now, what do I mean by copy paste BS? So you Googled a strategy, you slapped it on your document, and then you call it a trading plan. That's not your trading plan. That's some random dude on Reddit's plan. And you're kicking yourself in the foot or leg or thigh or however flexible you are. And no wonder it doesn't work. It's not personalized to you. The second problem, and why your trading plan is garbage, the second problem happens to be there's no pain tolerance built in. Okay. No pain tolerance built in. I'm just going to put PT. No pain tolerance is built in. One of the concepts that I work with my clients on and students on is this idea of learning how to crash. Your plan doesn't actually account for real world pressure. What do you do after 3 losses in a row? What do you do after missing your entry by 2 pips? What do you do after the news nukes your setup? If your plan doesn't answer those questions, hey, my friend, it's not a plan. So we must understand that one of the problems with trading plans is that there's no pain tolerance built in to the plan. And I would say this is the most important problem with most trading plans. Number 3 is the most important problem with trading plans is that you treat your plan like a suggestion versus a standard. Okay, using my trackpad here so we get some beautiful artwork today. You use your trading plan like a suggestion versus standard, a standard of how you operate in the market. It's something that you are hoping to follow. It's something, because of our problem number 1, is something that you don't personally feel attached to. So there's no personal accountability. And this is the big one because you think your plan is optional. You think you can trade based on vibes and fix it later. What do real traders do? What's the secret to a real trader's plan and how they approach their trading plan? I'm going to tell you. They treat their plan like, guess what I'm going to write out here? Like it's law. They treat their plan like it's law. So let's go deeper into this topic of why you don't follow your trading plan, because this isn't about charts. You'll hear me echo time and time again. It's not about indicators. It's not about strategy. It's quite simply about you. So why don't you follow your trading plan? You don't believe in it. You don't believe in your trading plan. It's not built on your data. You haven't battle tested your plan. Okay. Sometimes, or when things go wrong, what happens with that plan? You doubt it and you bail. So you simply don't follow your plan because you don't believe in it. Now, the second reason is that maybe you still think you're smarter than the market. We're friends, right? Let's be honest. Every time you override your stop loss, every time you take a trade that's not in the plan, you're saying to yourself, I got this. And guess what? You don't. Another reason, another deeper reason why you're not consistently following your trading plan is because you are addicted to the chaos. I'm going to find the video where we recently talked about this idea of being addicted to the pain of losing trades. And I challenge you to go and check that video out. We posted that live about, or streamed that live about 9 days ago. Are you addicted to losing trades? And so this idea of being addicted to the chaos, you say you want consistency, but you trade like you want drama. You say you desire consistency, but you like the drama of it all. You're emotionally wired to chase the thrill of the game, not the discipline of success. Now, I'm a firm believer in problem solving. I'm a firm believer in problem solving. So while we can talk about the many ways that the trading plan is broken, the part that's going to be the most beneficial for you is how to build a plan that you'll actually follow. So I'm going to go over 3 steps on how you can build a plan today that you will actually follow. Okay. So the first step that you want to do with building a rock solid trading plan, the first step is to test it with real data. No more backtest fantasies. Forward test your plan. Real time, low risk, let it prove itself. Test it with real data. It's not about how much money I can earn right now. If you're building a trading plan, it's not about how I can flip this account or double it or triple it or whatever your trading guru told you to do or told you that they did. Forward test your plan with low risk so it can prove that it works to you. The second step of building a rock solid plan that you will absolutely follow is to write rules for emotional scenarios. When I started to really evolve and take a look at trading from a professional standpoint or from a business standpoint and not just from a gambling or a lottery mindset, building into the plan what you would do after a streak of wins is just as important as building into the plan what you would do after, let's just say, a couple of losses. What do you do after the news hits? These are real life situations and they need real guidelines. So the second step of building a plan that you'll actually be willing to follow is to write rules for emotional scenarios. What happens when your stop loss is hit? Now, step three, step three of building a rock solid plan that you will actually follow is to make it binary. I'm not talking about gender. Make your plan binary, meaning yes or no, in or out, no guessing, no maybes. A real plan gives you real structure. Discipline isn't freedom killing, it's actually freedom creating. The idea of building a budget, some people will say, I don't want to build a budget. It's restrictive. I believe the opposite. I believe a budget promotes your financial freedom. And so the challenge is for you tonight, today, this morning, is to go through your trading plan and to be brutally honest with yourself. Does it reflect you? Does it reflect your style of trading? Does it reflect your weaknesses? Does it reflect your strengths? Or is it just a collection of trading memes taped together with hope? Is it a copy paste trading plan that your guru said they use? Or is it personal to you? And I really want to get engagement on this part. Drop in the comments the dumbest thing you've ever added to your plan because someone online said it worked. If you're watching this live or you're watching the replay, I want you to drop in the comments what is the dumbest thing you've ever added to your plan because someone online said it worked. You want to know mine? I got you. So when I first started trading about 7 years ago, one of the things that I thought was the best way to create a stop loss was having a 25 pip stop. I watched so many videos that were like, oh yeah, your stop loss should be 25 pips. Your stop loss should be 25 pips. Well, guess what? The pip value on different pairs change. The opportunity, the trading idea changes. The average daily range on an exotic pair is not the same as the average daily range on a major pair. And as I evolved in my trading, I realized that wasn't solid trading advice. If I put a 25 pip stop on GBP USD versus USD South African Rand, it's going to get hit every single time. So I'm really curious to know from you all just to drop whatever is the dumbest thing that you've ever added to your plan. Because if we don't expose develop yourself, you're ready to evolve, you're ready to grow as a trader. And so if you got an aha moment, I would love to hear about it. Would love to hear about that. So be sure to like the video, to subscribe to the video or the channel rather. Subscribe to the channel. You can subscribe to the video as well if you got some aha moments. I would love to hear. Trade safe and take care.